You know that feeling when you enter a short-term trade for a quick scalp, everything looks perfect, and then suddenly the price goes the other way. It feels bad, right? But today I'll show you exactly why that happened and how to stop it using one of the most trusted scalping strategies that even professional traders still use: Fibonacci plus RSI plus price action. By the end of this video, you'll know exactly where to enter, where to exit, and how to avoid fake signals. What tools we use? Alright, let's start with the tools we'll be using in this scalping strategy. We'll work with three very simple but powerful tools. First, the Fibonacci retracement. This helps us identify the pullback zone after a strong move in the market. Second, the RSI. It tells us whether buyers or sellers are in control, basically showing us the momentum of the market. And finally, price action. We'll look at the candle patterns like bullish or bearish engulfing to confirm our entries. Each of these tools has its own role. Fibonacci shows us where the setup might form. RSI gives us confirmation, and price action gives us the trigger to actually enter the trade. For this scalping strategy, the best time frames to use are usually 5-minute or 15-minute charts. Setting up the chart step by step. Now let's set up the chart together. First, open the chart on TradingView. At the top, click on Indicators, type RSI, and add it to your chart. Then open its settings. In the Input tab, leave the length at the default 14. Next, go to the Style tab. Here we only need a few things: RSI, RSI upper band, RSI middle band, and RSI lower band. We don't need the rest of these options, just uncheck them. Now set the levels to 30, 50, and 70, changing the color of the RSI and the level lines to make them more visible and make them a bit thicker so they are easier to see on the chart. When you're done, click OK. Now it's time to set up the Fibonacci retracement tool. On the left toolbar, find the Fibonacci retracement icon. If you don't see it, it's usually the third icon down. Now draw it anywhere on the chart and open its settings. Keep only these levels 0, 0.5, 0.618, and 1. You can uncheck the others. Change the color of the 0.5 and 0.618 levels to yellow. They are your golden zones. Perfect, now your chart is ready. Understanding the logic. Before we trade, let's see why the strategy works. When you understand the logic, you trade with confidence and not just follow signals blindly. As you know, the market never moves straight. It moves in waves: up, pullback, up again, or down, pullback, down again. That's where Fibonacci retracement helps. It shows us where a pullback is likely to end. At the key levels of 0.5 and 0.618, big traders often anticipate the end of the pullback and re-enter in the direction of the main trend. But we don't use Fibonacci alone. We need confirmation from RSI. In an uptrend, RSI above 50 shows buyers are in control, and in a downtrend, RSI below 50 shows sellers are in control. Finally, we'll look at price action, candlestick patterns like bullish or bearish engulfing to know exactly when to enter. Think of it like this. Fibonacci shows the area, RSI confirms the trend, and price action tells us when to enter. When all three line up, you get a high probability scalp trade. In the next part, we'll see how to combine these tools and create a trade setup. Buy setup. Before we continue, click that like button. It makes me happy and helps the channel grow. Alright traders, let's look at how we set up a buy trade for a scalp. First, we need to see a clear uptrend. This means the price is making higher highs and higher lows. We don't trade if the market is sideways. Once we see the trend, we take our Fibonacci retracement tool. Click on the swing low, the lowest point before the strong uptrend move, and drag it up to the swing high, the top of the move. Now you see the Fibonacci levels appear on your chart. We wait for the price to reach one of the golden levels, 0.5 or 0.618. Next, we check the RSI. For a buy, we want it between 50 and 70. This tells us the buyers are still in control, but there is still room for the price to move up. It's not overbought yet. If RSI is above 70, we have to be careful because the market may correct. Then we'll look for our price action confirmation, patterns like bullish engulfing or a candle with a long lower shadow. This shows that the pullback is ending and buyers are ready to push price up again. When the candle closes and confirms the bounce from the Fibonacci level, that's our signal to enter the trade. Sell setup. Now let's look at how we set up a sell trade for a scalp. First, we need a clear downtrend. This means the price is making lower highs and lower lows. If the market is sideways, stay out. It's not worth the risk. Once we see the trend, we take our Fibonacci retracement tool. Click on the swing high, the highest point before the strong downtrend move, and drag it down to the swing low, the bottom of the move. Now the Fibonacci levels appear on the chart. And again here, we wait for the price to reach one of the golden levels, 0.5 or 0.618. Next, we check the RSI. For a sell, we want it between 30 and 50. This tells us that sellers are still in control, but there's still room for the price to move down. It's not oversold yet. If RSI is below 30, we have to be careful because the market may correct. Then we'll look for price action confirmation, patterns like bearish engulfing or a candle with a long upper shadow. This shows that the pullback is ending and sellers are ready to push price down again. When the candle closes and confirms the bounce from the Fibonacci level, that's our signal to enter the trade. Real market examples. Buy setup. Here's a real scalp trade example. Notice this clear uptrend. The price is making higher highs and higher lows. Take the Fibonacci retracement tool, click the swing low and drag it to the swing high. Look at the golden levels, 0.5 and 0.618. Wait for the price to pull back. Now check the RSI. It's around 55. Perfect. It shows that buyers are in control and the price can still go up. Now take a look at the price action. Here we see a bullish engulfing candle forming. This candle completely covers the previous one, showing that buyers are ready to push the price up. Enter the trade after the candle closes. Set your stop loss just below the swing low and set your take profit at the previous swing high. As you can see, price moves up and hits the target, a successful scalp. Sell setup. Now let's see a real scalp sell trade. Click on the swing high, the highest point before the recent move down, and drag it to the swing low, the lowest point of the move. Focus on the golden zones, 0.5 and 0.618 levels. Now just wait for the price to pull back into one of these levels. Next, check the RSI. It's around 45, which means sellers are in control and the price can still go up. Now check the price action. Here we see a bearish engulfing candle forming. This candle fully covers the previous one, signaling that sellers are ready to push the price down. Enter a sell trade after candle closes. Set your stop loss just above swing high and set your take profit at previous swing low. As you can see, price moves down and hits target. Another successful scalp. Alright traders, that's for today's scalping strategy. Now you know how Fibonacci, RSI, and price action work together to give you high probability scalp setups. If you found this strategy helpful, please like this video and subscribe to the channel for more content like this. I also recommend checking out other scalping strategies we have on this channel to improve your trading even more. Thanks for watching and I see you in the next video.